First up, we have Southern Palladium, ASX code SPD. Southern Palladium has acquired a 70% interest in the Bengwenyama Palladium Rhodium nominated PGM project located in South Australia. Presenting for the company today is Roger Baxter, Executive Chairman. Roger, thank you so much for your time, and over to you.
Abby, thank you very much indeed, and great to be with you on the show. Appreciate the invitation. So thanks very much. You almost got it right. The Bengwenyama project. It's actually located up in the far eastern limb of the Bushveld complex in South Africa, but we are an ASX listed and a JSE listed company. So just we're putting my video on. Okay, there we got it. So let me start off by saying, if you look at one motor vehicle from the 1970s and you just then reflect on the fact that that car produces as much pollution as 600 vehicles today, and you're probably asking, well, why am I basically saying this? The key thing here is that it was not only technology, but it was also those wonderful metals called platinum group metals. That's platinum, palladium, rhodium, ruthenium, osmium, and iridium. That are probably the best known catalysts that man has at our disposal that are used in the cleaning systems that basically cleaned up those vehicles. So the key difference between those vehicles, between the one vehicle producing a whole bunch of pollution and having the same level of pollution as 600 vehicles today was PGMs. So PGMs are really special metals. Where do you find PGMs? You find PGMs, platinum group metals. South Africa is basically the real treasure trove that has over 70% of the world's known platinum reserves in a strata called the Bushveld complex. And South Africa itself, just to highlight a couple of quick points before I jump into the Bengwenyama project itself, we have a new government of national unity in place, which was elected in June of this year. A whole bunch of new economic structural reforms have been implemented. A lot of people who know South Africa will appreciate that there hasn't been load shedding for since February, so that's not been really welcome. But that's been because of the reforms that are taking place, the structural reforms that are being implemented in the economy, which are definitely enabling South Africa to get back onto the investment radar screen. So let's jump into Southern Palladium. If I can ask you to go to the next slide, which is our cautionary statement. I'm sure all of you have read the fine print already, so let's jump into the next slide. And just to highlight, so this is a absolutely prime platinum group metals. We're not just focused on palladium or rhodium. Platinum is actually one of our bigger products that comes out of the projects, but in fact, we were looking for the 6 E's, which is obviously all the platinum group metals themselves plus gold, which is the 7th E, as we call it. It is located on the far eastern limb of the Bushveld complex, right up in what we call prime mining, PGM mining real estate. We've got a number of other big operations around us. For example, Modikwa to the north of us, which is an Anglo-American African Rainbow Minerals project. To the south of us is Two Rivers, which is Impala Platinum and ARM joint venture also. So it just demonstrates where we're located. And if you think about it, this is a project which is the last tier 1 substantial deposit. It's close to surface, low cost, high grade, which hasn't yet been developed. So we're in elephant country, and we've got an elephant by the tail in this particular project. If I can skip to the next slide, ask you to skip to the next slide, please. So let me jump into a couple of corporate issues. So the first one is our corporate structure. So the listed entity, Southern Palladium, on both the JSE and on the ASX, we have a 70% equity stake in a very interesting name, Miracle Upon Miracle Investments. This is the vehicle that controls the mining right. Our community partners, the Bengwenyama community, have a corporate entity called Neuronox Investments, which has a 30% equity stake in the company. And we are very pleased to be partners with the Bengwenyama community. We see them as our real partners in the project. And excellent cooperation and work with them. We have a great board of directors with a significant amount of both Australian and South African mining experience, and obviously important to bring the entire project forward. And we've had an excellent team, Manexcom, who's helped us with all the work producing the pre-feasibility study, which is where we are at the moment. If we can go to the next slide, please. Just a little bit more on our corporate structure. We have over 90 million shares on issue. Our share price is up 100% year to date. And we are sitting at 70 Australian cents on the ASX with a market cap of just over $64 million. Obviously, we're getting closer to that magical 100 million mark. What is important about it, though, is we have our top 20 shareholders have 79% of the equity, the management team and directors about 17%, and having seen the market cap improve nicely, that's part of the journey that we've been on in terms of delivering on the project. Next slide, please. So why our project? Well, first one to say is that this is a critical project which delivers a set of minerals that I'll talk about just at the end of the presentation, which is absolutely critical to our clean energy future at a global level, and that's in the platinum group metal space. Not only have they helped clean up vehicle pollution and other pollution over the last 30 years, but they're also critically used in a number of different industrial applications. They are used in jewelry. Over 2 million ounces is used in jewelry demand at a global level from a platinum perspective. 500,000 ounces a year in investment demand, because it is a very rare set of minerals, etc. So critical minerals, we are shallow, very close to surface, between 50 to 500 meters depth. So we'll be accessing ore very early. Remember that a number of South African deep level projects are up to 2 kilometers in depth, which creates its own set of challenges on ventilation, cooling, etc., which we don't face in this particular project. We are right in prime mining real estate, which I mentioned a little bit earlier, and that prime mining real estate is really important. We have all the infrastructure reticulation close to us, 2 Eskom substations. We've got a dam called the De Hoop Dam quite close by for water. We've got road networks, rail networks. We've got 2 ferroalloy smelters right on our doorstep. And South Africa has a very well-developed smelter and refining industry, which does put us apart from many other countries that are trying to develop their nascent PGM industries. Let's just jump onto the next slide, please. Yeah, this is a quick snapshot of where the deposit is located, up in the Bushveld complex on the far eastern limb. You'll see the right-hand pictorial, which has the view right out to the distance. That's basically the entire length of the tenements. On the bottom left-hand side, we've got a quick chart showing where most of our drilling has taken place. So we've done over 33,000 meters of drilling, and we've got ourselves to effectively 40 million ounces inferred, indicated, and a 6 million ounce reserve. And we'll be mining probably 94% of our first 10 years of mining will be in that particular area. So very confident of the results so far. Let's jump to the next slide, please. If you look at our revenue split, rhodium does form the biggest component at 28%, followed by platinum at 26% and palladium 24%. But we also have a very nice spicer of iridium, and chromite makes up about 12%, gold makes up about 3%. So nice overall basket of PGMs. Let's jump to the next slide, please. So in our PFS, which came out on the 28th of October, really some fantastic results. This is definitely tier 1. We're going to be producing 2.4 million tons of UG2 reef at steady state, which is a big mining operation. We will be producing about 400,000 ounces of PGMs on an annual basis and about 350,000 tons of high-grade chrome ore, which is quite sought after. So that's a very good output from the project. Our financial modeling metrics have come out exceptionally well. Just to highlight, our post-tax NPV at an 8% discount rate is sitting at about $1 billion US. That's very nicely leveraged to the price. If we have a 15% improvement in the price, we'll see about a $350 million US post-tax improvement in our NPV. We've got a 28% internal rate of return criterion, which is really good. Anything over 20% is really good. And again, if you leverage it, it goes up quite nicely if you have higher prices. And our payback period from production of first concentrates is sitting at 3.5 years, which again is very interesting. This is a very cash generative project. It's going to generate something like $200 million plus per year when we get to good steady state mining on a post-tax free cash flow basis, so very, very cash generative. And what's really unique about this project is because we're close to the surface and we've got a very good quality deposit, we're looking at very low all-in sustaining costs at $800 per 60-ounce equivalent, which puts us on the next slide in the lowest cost quartile. And just to highlight, our peak funding requirement that was on the previous slide is 450 million US, but that's not what we would require in year one right up front. It would be, the overall capex required to get the project going to steady state mining. On the cost side, we bottom right on the bottom left, you can see in the lowest cost quartile, really nice place to be from a mining company perspective. And so even if we saw prices 15% below current levels, project still makes a lot of economic sense with a post-tax IRR sitting above 20%, etc. So let's go to the next slide. This is basically our annual and cumulative cash flow report. You can see the first couple of years are very obviously require a lot of capital to be spent, but very quickly get us into ore production within 18 months. And this is very much the influence of using Australian mining techniques, using two twin declines to access the ore quickly using spirals. And then we'll jump into what we call hybrid mining, which is mechanized development and traditional conventional stoping in the stoping. So very nicely cash generative, very long life. This is based on the existing ore reserve that we know and we've actually proved up, but it gives you a very nice view of what the cash flow will be over that particular period. Let's jump to the next slide. So on the corporate responsibility and regulatory sides, great community partners in the project, the Bengwenyama community. We have submitted a mining right application in September last year, 2023. We're expecting that to be approved in the second quarter of 2025. So that's quite soon. And we have some other environmental processes, which are the normal in parallel processes, a water use license, a waste license, which are also in process, and we're not expecting any red flags or anything to come out of those particular processes. So all systems are going from both a regulatory and from a CSI perspective. Let's jump to the next slide. This is a quick look at our timelines before I jump into our last Why Us pitch, and that is during 2025. So we've just produced the PFS on time, within budget, and really nicely still have just under $5 million cash in the bank, and we're looking at doing some further DFS level work on the project, some DFS level drilling, which is more network drilling, and then obviously really sharpening the pencil on each of the different aspects around the supporting infrastructure, the processing plants, the mining processes, the ultimate financials, etc. And those are normally done almost in parallel with the banks and others who will do their own study updates at a bankable feasibility level. So we're anticipating getting to final investment decision sometime in the first quarter of 2026. And obviously lots of work has already gone into how we're going to ultimately end up developing this project and how we're going to end up funding the project over time. So let's jump into the next slide. So let's just wrap it up before I jump a little bit into the PGM market space, because Abby, you did say to us you would give us a minute or two extra. Great. This is a great PGM opportunity, platinum group metal opportunity. And as mentioned, it's the full PGM suite. We have a confirmed reserve and resource. Our reserves are according to JORC. Our geology is definitely tier 1, and all indications are we're going to be producing a very substantial a very substantial mine will be developed on the basis of this great geology. We've got a community that are really keen on making sure that this project works. They see us as partners. We see them as partners. We're considering it a true economic partnership between both of us. And they certainly see the enormous benefits that a project of this scale can bring to their community. The location is tier 1. It's in prime PGM mining real estate, as we said earlier, with excellent infrastructure around us. And that makes it a lot easier to develop a project of this particular scale. We've got a very experienced board and management team with a proven track record on PGM development in South Africa. And so They've really helped contribute towards an excellent PFS and already have started the work on the DFS level, and very good progress made on that. And it's a really attractive value proposition. At steady state, 2.4 million tons of production on an annual basis, generating 400,000 ounces of PGMs, generating a post-tax NPV of over $1 billion US, which is very good, and highly leveraged to higher prices. So, as mentioned earlier, 15% increase in prices raises that by about 350 million US post-tax, which is really good. And we are right in the lowest cost quartile of the PGM cost curve, which obviously also is a very good place to be. So that's a quick snapshot on the company. If I can just say, there's always a lot of questions about the PGM markets, and just to highlight just a very quick point, if I may, that on the platinum space, what we've seen over the last 4 years is a reduction in platinum supply that's taken place. So if you were going from 2021 to 2024, total supply of PGMs, new mine supply of PGMs has gone from about 6.2 million ounces down to about 5.5 million ounces. That's just been because of switching off uneconomic production and obviously the impact of COVID. We've seen also a reduction in scrap recycling. But what's interesting in both mine supply and scrap recycling is mine supply continues to go sideways over the next 4 years to 2028. Scrap recovery picks up a little bit, but not as much as people initially expected. But more excitingly, on the demand side, because we've seen a peaking in the growth rates in electric vehicles, battery electric vehicles. So people anticipated that BEVs would wipe out ICE vehicles, internal combustion engine vehicles. What's actually happened is that growth rates in BEVs has slowed to single-digit levels, and hybrids have actually grown remarkably. And hybrids obviously do have an ICE engine in them, and that requires platinum. So automotive demand has grown nicely in the last 4 years, up from 2.5 million ounces up to about 3.2 million ounces. And we expect the automotive sector to go down to about 3.1 million ounces by 2028. So not a big fall off. Stronger for longer is what the demand for platinum is going to be, and for palladium in terms of the automotive sector. There's also very good industrial demand for platinum in particular, 2.5 million ounces per year. We've got 2 million ounces of jewelry demand, 500,000 ounces of investment demand, all adding up to about 8.1 million ounces of demand this year, going up to about 8.3 million ounces of demand by 2028. But very nice deficits in the market, just over a 1 million ounce deficit in 2024, and having deficits of about 800,000 ounces to 700,000 ounces per year out to 2028. And so our view is that we've seen the bottom of the platinum market. Platinum today was trading at just over $960 per ounce. We think that that's the bottom of the market, and the prospects are looking good as the fundamentals come back and feed the platinum market. And on the palladium market side, obviously also a big part of our production base, we've seen deep deficits over the last 2 years. We'll see a deficit this year of about 1.3 million ounces, a further deficit next year of about 200,000 ounces, and then more back into balance. And we've seen prices there just over $1,000 an ounce on the palladium side. So both interesting areas, but still very much linked to greening the automotive sector. And obviously the exciting area which we can talk about in the Q&A section is on hydrogen, and how green hydrogen is shaping up quite nicely from a platinum and palladium perspective. So thanks very much, Abby. Let me hand back to you.
Thank you so much for your presentation, Roger. So I do have a few questions here, but my first question is, with the Bengwenyama project targeting production by 2029, what are the critical milestones investors should monitor over the next 5 years?
Abby, thank you very much. So we've met one of the critical milestones, obviously, which was the production of the PFS on the 28th of October. That was a really good outcome, and it's been very favorably received in the market. And it's on our website if anyone wants to go in and have a deep look at that. Summarized presentations capturing the essence of that are on the website at the same time. Our next key milestone is going to be the award of the mining right. The mining right should be taking place, if all goes according to plan, and we think it is going according to plan, sometime in the second quarter of 2025. We'll then have further progressed on our DFS work, which will take us out towards the end of 2025, and be looking at tying up a number of different ends in that particular process, with probably FID taking place first quarter 2026. So those are a couple of the milestones that are coming up for us. But certainly all's gone according to plan, and there's not many companies that have been able to spend 14 million, just under 15 million Australian dollars, and in 2.5 years prove up a 14 million ounce reserve resource of PGMs. And so we've met a lot of milestones along the way, and we're looking forward to continuing to meet those milestones as we go forward.
Thank you, Roger. And how does the hybrid mining downstream beneficiation approach give Southern Palladium a competitive advantage in the PGM sector?
Well, we would be producing, first of all, on a mining technology basis, the traditional mining methods in South Africa in the PGM ore deposits are what we call hybrid mining, which is obviously what we call mechanized development, and then obviously conventional mining in the stopes. So it's a well-proven, practiced technology that takes place in all the mines around us. So what's that expression? No rocket science involved in the mining. The mining is well proven. And South Africa does employ 190,000 people in the PGM mining industry. So it's a big industry. A lot of skills are available in that sector, for making sure that we are able to develop the project according to plan. So that's one area. Then we are obviously planning to develop our own concentrator, a two-stage MF2 processor plant, which would basically take our ore, produce about 120,000 tons of concentrate on an annual basis, and that concentrate would then go across to the Western Limb to one of the 4 major producers where the smelting and refining capacity does take place. So we would take it down to about 120,000 tons of concentrate on an annual basis, and then there's a well-proven methodology for either toll refining or entering into a concentrate arrangement with the major mining companies. We've already had discussions with the 4 majors on possible offtake or toll refining discussions, and those have gone well. And we certainly think that there'll be takers for our product when we get to that mining stage. Obviously, we would have sewn that up when we get to that particular point. So we're not seeing that as a risk. We're seeing that as it's a positive story for South Africa, because that smelting and refining capacity doesn't exist in many other countries who are trying to develop their PGM sectors.
And what specific benefits will Bengwenyama, the community, gain from the partnership in the project, and how does this align with the company's ESG goals?
The Bengwenyama community are a community that have been in the area for 150 years, so they're well established. They see this as a great opportunity, and they see the Royal Bafokeng Nation, which is also one of the tribal nations in South Africa that worked with the platinum sector extensively and saw enormous benefit flowing back to them through the income stream and others that come back in terms of employment, investment, supply industries, etc. And so the Bengwenyama project is going to be exactly the same in terms of, we think about 4,500 direct jobs, employment opportunities are going to be created. That's 4,000 direct, about 12,000 in total if you include the indirect job opportunities. There will be a significant further enhancement of the supply base in the domestic area. And we'll certainly concentrate on making sure that we are employing as many people from the local community as possible and working with them to develop their skills and capability. And just to highlight to you, we've already employed in our geological programs a number of people from the local community, in our security programs a number of people from the local community, etc. So whenever the opportunities are presenting themselves, we are working with our local community partners in making sure that the project generates a lot of economic benefit from a community level. From a country level perspective, the impact is profound. It's, if you think about over $12 billion in revenue stream over the 29 years of the existing mine life, and we think the mine life will be a lot longer than that. The tax revenue benefit of that would be significant to National Treasury. The impact on the balance of payments and export earnings would be great. The investment numbers at about 450 million US, which is just shy of 8 billion billion rand invested in the country, etc., all really positive points. And we've been working very closely with government, through the regulatory processes, etc., they see this very much as a flagship project demonstrating that South Africa is very much an investable country from a mining perspective.
And
From an ESG level, let me answer that quickly. Sorry, I just
yeah.
From an ESG level, we've worked very closely with our community. We're planning all our plans in relation to tailings facilities, management of the entire footprint of mining is done in a way which is absolutely in sync with the best and leading practice globally. So we've considered a number of different options for how we can do dry stack tailing, for example, as one of the options, as opposed to wet tailing facilities, which have their risks, etc. We've been looking at making sure that we can use all the latest technologies from a dust suppression point of view, how we work with the community on making sure that other spin-off benefits take place into the community. So ESG is not just about, I actually like to refer to it as EESG, because it's not just about economics, social and governance, all the right issues that are definitely part of what we're working very closely on, but it's also about having something that economically really contributes. That's the EESG, which really is going to make a difference to the community and the environment.
Great. And then, so after the mine reaches steady state production, what are the company's plans for exploration or further expansion within the Eastern Limb or other regions?
At this particular stage, the idea would be to do further brownfields exploration on the existing 2 farm sites. That would basically enable us to prove up additional resources and reserves. And just bear in mind that we are, at this particular stage, focused on the UG2 ore, which is, we have 2 significant PGM reefs on the property. One is the Moransky Reef, one is the UG2 Reef. So we've only focused on UG2 at this particular stage, although we do have the Moransky Reef in our resources and reserve statement. Now, what's important about this is that it gives you lots of optionality to also mine the Moransky Reef over time, and many of the other operations in the area have done exactly that. So we certainly see this as every mining company does in the area, proving up further reserves to add to the mining repertoire as we go forward. And then I guess we focused on making sure this project is properly developed, given the huge economic footprint, positive economic footprint that it'll have on the country. But we also see it as very much a stepping stone as we go forward from a company level perspective.
And then just talking funding, Roger, so how well funded are you to continue operations over the next 6 to 12 months? Will you look to, raise capital or anything along those lines?
There certainly are. We've got just under $5 million in the bank, Abby. So it's we've met our targets to produce the PFS, and we still got additional resources available to us. So we are nicely funded, probably towards the middle of next year. We probably may have to have a small interim capital raise. That's just one of the things that we might need to do. Those are all the options that we'll slice, dice, and consider and finalize in the early part of next year, in January next year, at a board level. And so, yes, that's a work in progress, but I think that'll take us through to full completion of the DFS. And obviously, banks would have come in probably by the second half of next year to do their bankable feasibility study work, where they bring in other external experts to verify geology and other factors. We've already used third-party specialist service providers like SRK and others to vouch the various work that we've done so far, which I think has been really constructive. And so probably reaching financial FID, final investment decision, sometime first quarter 2026. So that's the sort of time horizon that we're working in at this particular stage. But a possible interim capital raise will be necessary sometime middle of next year.
And the last question from me, Roger. So beyond mining, does the company have plans to diversify its revenue streams, such as entering recycling or value-added segments?
At this stage, Abby, the recycling business is very interesting, but that's normally companies that have large smelter and refining capacity in place, and that's normally the 4 South African majors: Anglo Plats, Impala, Northams, and Sibanye-Stillwater. So they do quite a bit of scrap recycling from scrap coming in from the rest of the world. We won't have smelting and refining capacity on site. We'll only be taking it up to the concentrate level, which we'll then ship across to the smelters and refiners on the western limb of the Bushveld complex. So we probably won't get too involved in scrap recovery at this particular stage, but I guess that's part of a evolving market. We don't have any other plans at this stage to expand beyond PGMs. We focused on making sure we can deliver this project. It's a really critical tier one asset that needs to be developed, and so that's our sort of primary focus at this particular stage. But I guess as we go forward, it'll create interesting opportunities to diversify at a global level. But we'll come back to the market with that sort of information at the right time.
Fantastic. Thank you so much for your time, Roger. That is all we have time for today. Great presentation. We'd love to get you on the webinar in the new year, and we'll be keeping a close eye on the company. But until then, have a great weekend.
Thank you. Keep safe. Thank you. Bye.
Thank you.